for more on those moves is Jacques Pretorius from Sinayo Securities. Thank you so much for your time, Jacques. Of course, as I mentioned, the big print that investors are really looking forward to is that CPI print. And we've actually had quite a bit of optimism on that headline figure, with most forecasts expecting a drop to 6.5% US consumer inflation year on year. We even have a forecast as optimistic as 6.3%. But I was looking at Twitter earlier on, and there's really quite a big debate on the stickiness of inflation going forward. I'm just interested to find out from you, what will you be sifting through in those numbers to kind of confirm your thinking of how sticky inflation will be going forward or not?
Okay, first of all, I do think, right, we're sitting close to a peak in inflation, or we might have already seen that, and the forecasts are all lower. I think what's going to be very important, right, is the comments that comes out of the Fed tonight. Recent comments have been quite hawkish in the sense that, you know, they tended to say that they want to stamp out this inflation at all cost, and if it needs be, they will continue to raise interest rates. Our internal view is that we'll still peak at around about 5%, and we probably might not see a level be above that. That is what we are hoping for at the moment. But obviously, my thinking is we probably see a positive figure close to the forecast, or perhaps even slightly lower. But it all depends on what the Fed says tonight.
Yeah, quite a positive figure that is expected, right? But at the same time, we have the Chinese reopening, and I'm actually quite interested in the relationship between the reopening of China and the inflation trajectory going forward. We did have Goldman Sachs and Morgan Stanley forecasting that Chinese GDP growth could be more than 5% for 2023. Of course, we do know the relationship that more demand has on the prices of commodities. We have seen the movements in oil right now. And I'm wondering, because there's been quite a lot of optimism that we could see interest rate cuts from the Fed as soon as the second half of 2023. I'm wondering if we're not jumping the gun on that, considering the demand that we could see from China and also those rising commodity prices.
Yes, I do think China, right, wants to do everything to support their economy, right? So they will stimulate as far as possible. We've recently seen that there's a likelihood of them opening up their COVID restrictions, so that's going to be very positive for them. That will give them a boost in their growth. And also, you know, the other thing that's come across is that it's sort of the regulatory push they've had on their tech stock is also dissipating somewhat. You know, and that's why we see in the recovery and the rally in some of those tech stocks on their side. So these are all positive developments. Yeah, so I'm relatively bullish on the market for the year. You know, we've had a tough year last year. S&P ended down 15%, the Nasdaq 30% down. I do expect a bit of a recovery. South Africa actually performed pretty well in relative terms. I think we were slightly up in rand terms and only down about 3% in dollar terms. So in a world market context, we actually did pretty well.
Yeah.
We're starting to recover our long-term rating. So our long-term rating on our market is around about a 13 times price multiple. We think that the earnings forecasts are perhaps a bit optimistic. We could see a slight downward revision in earnings of about 5% odd. But the re-rating in our market, we're translating around about 15% return for the year as a whole on the equity market. So we're cautiously optimistic.
Yeah, all right. Just talking about optimism and those the rises in commodity prices, we are seeing copper really kind of coming out as the big winner right now with the reopening of China. We saw it at more than 6-month high. Are you keeping any kind of close eye or keen interest on any specific copper producers at the moment?
Well, I think our big exposure that we have is through Anglo American. That is the one that sort of stands out. There are a few smaller ones that are more explorational, but I think the big play for us is being in Anglo's. That's firing at the moment. I've probably got some more upside. Some of these resource stocks are getting to slightly overbought levels. They've had a very good run right since around about October of last year. I think that continues for another month or so, and then we'll have to see, right, where it ends. You know, there might still be a bit of volatility going forward later this year. But certainly, I think the bull is in the resources for the time being, and we probably see higher levels for at least the first month or first 2 months of the year.
Okay, let's move on to PGMs and chrome. I'm not sure if you look at Teresa, but they had a production update out today for the quarter ended December. So still talking about buoyant PGM and chrome prices, although they did experience some pressure on the output side due to operational headwinds and unprecedented rainfall, but still keeping production guidance maintained. Just looking at the macro trends right now, do you think that Teresa could be in for a good financial year?
Yes, I believe so, right? So obviously with these production figures coming off slightly, and it's not a lot, it's in the region of about 5% odd. So you can expect the earnings to be revised down somewhat. They are still relatively cheap, I think. I think they've got a decent year ahead. It seems like their development project in Zim is going well. And I don't think that the production fall of 5% is a train smash. So they could potentially recover that, or they might be slightly lower. But at this point, right, everything seems to be okay-ish. Chrome price certainly held up quite well at $260 a ton, so that's holding up nicely. On the PGM front, obviously what we're seeing is platinum recovering quite nicely. But palladium coming off a bit, so there's definitely a bit of substitution taking place right now of palladium for platinum. Platinum price looks very strong, while palladium price looks at trying to maintain a support level at the moment. So we'll see how that goes on. But I believe, looking at the world economic growth, and it all looks to me at this point, right, that America might have a softer landing. So I suspect these commodity prices might actually hold reasonably well. I don't see them firing up very aggressively, but at least maintaining levels, especially on the palladium front, but possibly we could see platinum going higher.
Yeah, all right. I was looking at that share price movement and I was actually expecting a more cheerful response from the market, but maybe investors are still on the beach while we work, Jacques. But let's get to your stock pick for today.
Okay, my stock pick for the day is Motus. It's actually surprising that we've seen it fall off right during the course of November and December. We've seen continuous increase in car sales, and even in the other markets, right, like Australia and the UK, it's been plus 10% growth in demand. And I don't think the market's priced that in. I think that they actually look very cheap. They're a quality operation, quite strong return on equity that we've seen over the last while as well, 29%. And they're quite cash generative, right? So they do now have a nice rand hedge exposure, right? Having been in those offshore markets. And while the growth is there, I think, that's one of the ones to watch. It's very close to a technical breakup at the moment, around about this 116 rand level. So yeah, I think it sees its all-time highs that we've reached earlier the year at around about September odd of 130 quite easily going forward at some point in this year.
Yeah, all right. Well, thank you very much for your time and for your insights today, Jacques. Appreciate it. That was Sinayo Securities' Jacques Pretorius.